Morning, everybody. It's the Friday, the 10th of Feb. Finally, we have a decent amount of movement on the markets on the FTSE 100. So yesterday we finally had a positive close towards the end of the day. It didn't get sold off. As you can see, it closed above the 7,200 level, and it's really started to follow through today. So there seems to be some rising momentum on this. If you look at the indicators as well, I mean, just the way it's broken now, I'm pretty certain it's going to at least test the highs, if not make it, take another leg up. We got a smoothing across on the MACD, got rising momentum, rising RSI. And I'd say it's taken a little while for it to sort of materialize. But it has. Gold's down about $15 over the last couple of days as well. So it seems to be a bit more of a risk-on sentiment and coming back into the markets. Obviously, the Dow had a good day as well yesterday. So a couple of trades I have put on in light of that, just trying to sort of ride this momentum really. It's not been super easy to find things in the last few weeks, but with a bit of patience we can get there. So I've done the similar sort of Lloyds trade again that I did back in October. So Lloyds in this holding pattern here. Its results next week. Its results on the 22nd. Looks to me like it could be one of these situations where the technicals sort of tie in with the fundamentals, and if the results are good, which they have been for the last few announcements, and that pattern continues, then I'd expect it to break this sort of 68 sort of level rather. But it's really churning at the moment. If it breaks this, I think it's going to take another leg up. I mean, there's just less than 3% now left with the government of Lloyds shares, which obviously one of the biggest sellers in the market is just about, the biggest seller in the market is just about to come out. So if you look at this area here, the government's break-even price, 73p. So we're about here. And if you look, that's really been sort of a pivot around which Lloyds has traded. So people have been accumulating stock at that level. It was sort of support as it got a bit higher. Then the investment bank, I think it was Morgan Stanley, whoever Lloyds were using, kept selling back in to get rid of little chunks of the government's holding. Obviously, it had a bit of a Brexit wobble and things, and there was a few problems in China as well. So it has then dipped below it, and that level has since become resistance. But I think we've as long as the results are good, there's not too many additional PPI provisions. If it can get through this and get through the 73 level, then we could move into sort of fresh territory with Lloyds. So I bought 100 September 71 calls for 3p, so £3,000 outlay on that, and back to selling options, which is what I normally try and do. Sold some puts on EasyJet. So obviously it's been under a bit of pressure. It's one of the ones that doesn't benefit from a weaker pound. Obviously it means that British people's holidays are getting more expensive. So it's been negatively affected by that. But I've been watching it very closely. It really took a bit of a bid yesterday. So I've sold some May 9-pounders, 52p. There's a dividend, 53p dividend, payable at the end of Feb. That should be in the price, but obviously it may go X. If it does go X badly, then there may be a further a further move. But I got that cushion and down to £9. I'm quite happy with that at the moment. And we'll see if this seems to be some sort of head and shoulders type pattern, or whether it can get through this resistance line in the weeks to come. So yeah, it was Lloyds and Easyjet. They're two I've been watching pretty closely. And that's it for the time being.